Hello, and welcome to another update video about Natgas. So, haven't covered it for a while, but also not too much happened, or well, things did happen, but overall, nothing that would have invalidated our wave structure. The white scenario, which increased, or let's say, which indicated a high risk of a rejection up there in that previous swing high area, because I've been tracking this 5 down, 3 up move. As you might recall, the only thing that happened along the way, but we talked about that already, was that a smaller 3-wave move in this circle 2 actually extended quite a bit. So we could recognize at some point here, I think it was around mid-September, that it would escalate higher, possibly even reaching these targets up here between $2.58 and $3.02. But I haven't primarily been watching for an upside breakout, no, rather a rejection. Now, a lot of people told me that, whatever, due to seasonalities or whatever, it should break out. I don't know. It can do. I mean, again, what does the Elliott wave method tell us? It's not crystal ball. It doesn't tell us what definitely will happen. It tells us what should happen and where are the key pivots. And there was a key pivot there. And, with a 5-wave move down, I can't ignore that. This is a 5-wave move down. I can always be wrong with that, which is why I'm giving you the invalidation points, which for a 1-2 setup is the beginning of the wave 1, which topped here at around $3.17 in June. But the invalidation points stayed intact, and also here this kind of triangle pattern stays intact. So I see two pathways as very likely at the moment. One is obviously that a 4th wave topped here, as mentioned before. This is sort of the main count I have on the chart. And then we had a 5-wave move down in a wave 1, quite an aggressive wave 2 rally, which didn't take out the high of the previous 4th wave, so it did not invalidate the 1-2 setup to the downside. And the momentum of the sell-off indicates we could indeed be in a 3rd wave. The only thing I might need to do now is to readjust standard Fibonacci extension targets for the 3rd wave. If it pushed any higher since the last video, it did just slightly. So typically what I'm watching for in such a 3rd wave, it would be ideal if the price could reach the 1.236 Fibonacci extension. That's at $1.59. So we'll see if it can get there. The momentum is increasing kind of to the downside at the moment, and then we need another 4-5 pattern, and all that wave 5 needs to do is to break below the 3rd wave low in February. So decline, we seem to be in the main element of a 3rd wave. Then a 4th wave dead cat bounce, you could call it, and a 5th wave down that could target 148 and 131, and then it might be it. That might be it. Now, what sometimes happens, the market throws in curveballs. So something else I'm watching is maybe that this 4th wave actually is a triangle, which kind of can make sense. So then we have the wave 4 never topped here in June. Instead, it's A of the triangle, B of the triangle, C, D, E, and then we go down. Which means in this scenario, the leg down would not be as aggressive as the 3rd wave. The move up would be a bit more aggressive than the internal 4th wave here, but we would not form new highs until we finish off this correction. So those are the 2 roadmaps I see at the moment, but there's always going to be a level when I will change my view. So it's very clear. So overall, I'm watching for downside, because of especially the 5-wave move down, which actually makes a triangle less likely, because in triangles we shouldn't see 5-wave movements unless it's part of an internal structure, but it doesn't look like that. So I prefer the white count. Okay, it would be the cleanest. And to be honest, the pathways here have been following this wave count quite nicely. So I don't need to change my opinion right now, but I would do. If rules are broken, Elliott wave guidelines, rules, Elliott wave always tells us when do we have to change our view. And that's not subjective, like people looking for fundamental reasons and then say, oh, it should be this, it should be that, or fundamental, or whatever, seasonalities or demand goes up or whatever. No, it's just reading the chart, okay? And that gives you reward and risk. And the invalidation point is up here. It's the last swing high. If this is a 3rd wave down, we must not, we must not break above this high at around $3.02. Now there are going to be some early warnings, and to be honest, if this is a 3rd wave down in an impulse, the price should not break above the 50% retracement level. But this is only an early warning. This would not be an invalidation point or something. So $2.61 should actually not be broken to the upside, or we have to be cautious that something might change. There's the update about Natgas. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out the Stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.